Welcome to the deep dive. Today we're really getting into something crucial for traders. Mindset.
Yeah, absolutely. It's the big one.
We all spend so much time on charts, on strategies, but then, you see that perfect setup, you know exactly what you should do.
And then you do something completely different, right? Sabotage yourself.
Exactly. Something self-inflicted just messes it all up. It happens all the time.
It really does. It's probably the most common story in trading. You can have the best system, perfectly back-tested, great edge. But if your head's not in the right place, if emotions are running the show, well, it's like trying to run uphill blindfolded.
Yeah, lead weights in your shoes, like you said before we started. That gap between knowing and doing, that's trading psychology, right?
That's it right there.
Yeah.
That's the whole field.
And it's so frustrating. Watching a trade you call perfectly just take off without you because you hesitated, or bailing early because you got scared, it really feels like we're our own worst enemy sometimes. So the main thing we're digging into today is this idea. The biggest challenge isn't the market itself. It's you. It's mastering yourself.
Couldn't agree more. And trading psychology, it's not just, feeling a bit nervous or excited during a trade. It's the whole mental and emotional structure you bring to the table. It shapes every single decision you make, how you even see the market.
Right. From the moment you look at a chart to when you finally close the trade.
Exactly.
Yeah.
Your analysis, your entry, how long you hold, when you cut losses, when you take profits, it all runs through that psychological filter.
Okay. Let's unpack that a bit more. Because it's easy to think, psychology, that's just for stressful moments. But it sounds like it's woven into everything.
It really is. It's fundamental. Think about just getting into a trade. Are you entering only because your rules were met? Or is there that little niggle of FOMO?
The fear of missing out.
That feeling you're going to miss the big move. And holding winners. Are you sticking to your target or getting out early because you're scared of giving profits back?
I can see that.
And risk management. Ever moved your stop loss because you just couldn't stomach the loss?
Guilty. Probably more than once.
Or maybe cranked up your size after a nice win, feeling like you can't lose.
Yeah, feeling invincible.
And then how you react after the trade. Do big wins make you reckless? Do losses make you want to jump right back in and get it back immediately?
Right, that revenge trading thing.
All of that. Psychology is pulling the strings behind the scenes on all those decisions.
Okay, that really clarifies it. It's not just a small thing. It's everywhere in our trading. So let's talk about these traps then, these psychological pitfalls. You mentioned FOMO. Let's start there. We've all felt that, haven't we? That pull.
Oh, definitely. It's almost visceral. You see a price just shooting up or down, and you're not in it. And this urgency just hits you. Like, I have to get in now before it's gone.
Yeah, you feel like you're the only one missing out on easy money. Logic just goes out the window.
Totally. It's pure emotion overriding any strategy. You forget your plan, jump in late, probably at a terrible price.
Without confirming anything.
Exactly. No confirmation, bad risk, just chasing. And what usually happens, the move stalls, maybe reverses, and boom, you're caught.
Yep, been there.
So the lesson, really the hard lesson, is stick to your plan. If it wasn't a planned trade, you just have to let it go. Doesn't matter how good it looks right now.
Plan the trade the plan. Simple to say, harder to do when things are moving fast, but yeah, absolutely vital. Okay, what's another big one? You mentioned revenge trading.
Yes, revenge trading. This usually pops up right after a loss. Instead of stepping back, maybe figuring out what went wrong, sticking to the strategy, there's this intense need to make that money back immediately.
It's like an insult, isn't it? The market took your money and you need to get it back now.
Exactly. It stops being about smart trading and becomes about ego, about needing to erase that loss, needing that instant fix.
But your head's not clear then, is it? You're trading from a place of frustration or anger.
Precisely. And that leads to impulsive trades, bad decisions. Often people increase their size, trying to win it back faster.
Oh yeah, doubling down.
Or they trade things they don't normally trade, just desperately trying to get back to even. It can turn into a really quick downward spiral. One bad trade leads to another, driven by emotion.
It sounds like gambling, basically.
Yeah.
Chasing losses. Okay, next up. Greed and overconfidence. These can feel good for a bit. After a win streak, maybe?
They feel great. That's the danger. You have a few good trades, maybe a really big winner, and you start to think, wow, I've really figured this out. I've got the magic touch. The market seems easy.
They feel kind of bulletproof.
Yeah, exactly. And that's when the rules start to feel, well, optional.
Right. My rules are good, but this time I just know.
Precisely. So you start taking bigger risks than your plan allows, maybe jumping into setups that aren't quite A plus A just because you feel so sure.
You stop respecting the process that got you the wins in the first place.
That's it. Greed wants more, faster, and overconfidence tells you there's no risk. But the market, well, it has a nasty habit of reminding you about risk, usually very quickly.
Yeah, it can humble you fast. Those big gains made while overconfident can disappear in a heartbeat.
Wipe out weeks of careful work and 1 or 2 bad trades. It's all about managing risk, even when you're winning, especially when you're winning, maybe.
So true. Knowing when to protect what you've got is key. Okay, let's switch it up. What about the opposite end? Fear. Specifically that fear of actually placing the trade. Fear of execution.
Analysis paralysis. Yeah, this is a tough one too. You've done all the work, the setup looks good, it fits your plan perfectly.
Everything lines up.
And then it just freeze, you hesitate, right when you need to click the button.
What causes that? Doubt creeping in.
It's often doubt, yeah. What if I'm wrong? What if this is the one that loses? It could be from bad past experiences, maybe just a lack of confidence, or just, the fact that trading is uncertain.
And the result is?
Yeah.
You miss the trade.
You miss the trade. You watch it go without you, often exactly as you thought it would.
Ouch. That's painful too. Almost worse than taking a small loss sometimes.
It can be incredibly frustrating, and if it happens repeatedly, it really eats away at your confidence, makes you even more hesitant next time. It's a cycle.
Okay, last one on our list of pitfalls.
Yeah.
Confirmation bias. This sounds sneaky.
It is sneaky because it feels so natural and it plays on our basic human need to be right.
How does it work in trading?
Basically, we tend to look for and pay attention to information that confirms what we already believe or what we want to believe. So if you think a stock is going to go up, you'll naturally find yourself noticing all the bullish news, the positive technical signals, maybe opinions online that agree with you.
And you ignore the stuff that goes against your idea.
Or you downplay it. You rationalize it away. Oh, that bearish signal doesn't matter because you're building a case, but only using evidence that supports your desired conclusion.
Right, like wearing blinkers. You only see what you want to see. The danger seems pretty obvious there.
It is. You're not getting a balanced picture. Your ego gets tied up in being right, so you might miss huge warning signs.
Holding losers too long because you're convinced it'll turn around.
Exactly. Or entering trades based on a biased view, ignoring the real risks. It's about wanting to be right more than wanting to make money sometimes.
Wow. Okay, those are definitely some major hurdles. FOMO, revenge trading, greed, fear, confirmation bias. A lot to watch out for. So, the big question.
Yeah.
How do we start getting a handle on this stuff? How do we master our mindset?
Well, like we said, just knowing these traps exist, being aware of them, that's a huge first step. Seriously.
Awareness is key.
But then, yeah, there are concrete things you can do, and probably the most important, the bedrock, is having a really clear, written trading plan.
Right, getting away from just trading on feelings or vibes.
Right.
Rules-based.
Absolutely. Rules over intuition, especially when you're learning or struggling. Your plan needs to spell things out.
Like what specifically?
Yeah.
What goes in it?
Okay, so your exact entry criteria. What must happen on the chart for you to even consider a trade? No ambiguity.
Got it. Entry rules.
Then, critically, your stop loss. Where are you getting out if it goes against you? Define before you enter. Non-negotiable.
Okay. Stop loss. And take profit.
Yep. Take profit targets. Where will you exit if it goes your way? Don't leave it to guesswork in the moment. And also, what market conditions does your strategy work best in, and when should you just sit on your hands?
So knowing when not to trade is part of the plan too.
Definitely. And the absolute key is defining all this stuff before you trade. When you're calm, objective. Not in the heat of battle when fear or greed can take over.
That makes total sense. It takes the emotional decision-making out of those crucial moments.
Okay, trading plan. What else?
Journaling. Keeping a trade journal is really valuable, but not just the numbers.
Not just P&L, entry, exit.
No, I mean, crack that too, of course.
Yeah.
But also journal your emotions. How did you feel before you took the trade? Anxious, confident, bored.
How did you feel during the trade? Scared, greedy, hopeful. And how did you feel after? Relieved, angry, elated.
Interesting. So tracking the subjective experience alongside the objective data, why is that so helpful?
Because you start to see patterns. Maybe you notice you always feel super anxious holding winners and tend to cut them short.
Or maybe get reckless after a couple of losses.
Exactly. Or you overtrade when you're bored. By writing it down, those patterns jump out at you. You see how specific feelings lead to specific, often bad trading actions. It's about self-awareness. Then you can start to work on those specific triggers.
That's really powerful. Like getting a map of your own psychological weak spots.
Yeah.
Okay, plan, journaling. What else helps build that mental strength?
Learning to detach from the outcome of any single trade. This is a big one.
Easier said than done, right? We naturally focus on whether we won or lost money.
Of course. It's natural. Winning feels good, losing feels bad. But you have to zoom out. In the grand scheme of things, one trade doesn't define you or your strategy.
So shift the focus away from the profit or loss.
Shift the focus to your execution. Did you follow your plan? Did you stick to your rules for entry, stop loss, take profit?
Okay.
If you followed your plan perfectly, that trade was a success in terms of process, even if it happened to lose money this time. If you broke your rules, even if you got lucky and made money, that was actually poor trading.
Focusing on the process, not the result.
Yeah.
I like that. It puts the control back with you.
Exactly. Control the controllable. You can't control whether a specific trade wins or loses, but you can control whether you follow your plan.
Okay, that's a great mindset shift. And speaking of losses, because they will happen, how do we deal with them constructively?
You have to reframe them. Losses aren't failures. They're just part of the business. Think of them like tuition fees.
Tuition fees, I like that. The cost of learning in the market.
Pretty much. Every single successful trader has taken tons of losses. The difference is they learn from them. They don't just get angry or discouraged.
So analyze the loss.
Absolutely. What went wrong? Was it the setup? Was it your execution? Did you miss something? Did you break a rule? Extract the lesson. Use that information to get better next time. Every loss is feedback if you treat it that way.
Viewing losses as feedback, not failure. That takes the sting out a bit. Okay, makes sense. Is there anything simple, like really practical, we can do right in the moment before clicking the button?
Yeah, there's a super simple technique. It sounds almost too simple, but it works.
Okay.
Just pause. Before you place any order, buy or sell, just stop and take 3 slow, deep breaths.
3 deep breaths. Seriously.
Seriously, it only takes a few seconds, but it creates a tiny space, a gap between that emotional impulse, the FOMO, the fear, the greed, and the actual action of clicking the mouse.
Like a circuit breaker?
Kind of. It just gives your rational brain a split second to catch up, to ask, wait, is this really in my plan? Am I calm? Is this logical? You'd be surprised how often that little pause stops an impulsive emotional trade.
That's a fantastic practical tip. 3 deep breaths. Easy to implement right away.
Okay, so as we kind of wrap up this deep dive on trading psychology, what's the main thing, the absolute core message people should take away?
I think the core message is that you, the trader, your mindset, your discipline, that's your biggest edge. It's more important than any indicator, any strategy, any system.
Right. It's the foundation everything else is built on. You can have the best tools, but if the person using them isn't psychologically sound,
they won't work. Or not consistently anyway. If you really want to succeed long-term in trading, you have to work on your inner game, on your psychology, just as hard as you work on your charts and strategies.
It's not an optional add-on, it's central.
It's absolutely central.
Well, this has been incredibly insightful. Thank you for breaking down such a critical part of trading. Hopefully everyone listening has picked up some actionable ideas to start strengthening their own mindset.
My pleasure. And remember, it's a continuous process. Self-awareness, consistent effort. That's what leads to real improvement in your trading performance over time. Absolutely. And if you enjoyed this discussion and want to connect further, you can find us over on Telegram, that's at The Trade Sage Analysis, and also on Instagram at The Trade Sage. We'd love to hear your own experiences with trading psychology.
Yeah, definitely share your thoughts.
So, until our next deep dive, remember, trade smart, trade wisely, and yeah, definitely trade with a focused, disciplined mind.
And maybe leave with this thought. Which one of those traps we talked about, FOMO, revenge, greed, fear, bias, which one feels most familiar to you? And what's one specific thing, just one small step from today's chat, that you could start doing right away to tackle it?